Welcome back to the channel. My name is Alex, and in this channel, we document the growth of a $100,000 account I've created for my newborn son. We're growing the account using technical analysis, fundamental analysis, and some news. If that's what you're into, stick around. All right, so big day today. Later on in the video, I'm going to go over what I did to the portfolio. We rebalanced a lot of things because the equity side of the portfolio started to get a little bit of ahead of the bond side of the portfolio. So I'm going to lay that out for you guys later on. But yeah, without further ado, let's see what's going on with the news. So as you can see here, yeah, we had a slew of tweets from Trump. We were kind of expecting this because the market's at all-time highs, but basically he's going to start threatening countries again and doing all the tariff stuff. So we're going to get some volatility. And I think that's going to continue for some time because once we get into the market monitor segment, I can show you guys how extended the market is and how we got a slew of sell signals today. And I just think, he's got a lot of leeway here. Market's at all-time high, so he's going to try to pull it down again and just mess with the world economy via these tariff threats. So yeah, that's basically all that's going on the news front. Let's go check out the market monitor and see what's going on over there. All right, so for those of you who are new to the channel, the market monitor is basically a collection of data I've taken over time. It basically tracks where stocks are, whether they're in uptrends, downtrends, sideways, whether stocks are ending at the high of the day, extent of moves, whether stocks are moving really fast or if things are moving pretty slow, and some long-term breadth indicators. And I use this to supplement my investing process because basically without knowing all the internals of the markets, it makes investing a little bit more difficult. So yeah, without further ado, let's go check out the market cycle. All right, so as you can see here, we are market monitor green and we are day 10 green. And so far the market's moved about 4.42% within 10 days. The average green cycle lasts about 12.6 days and moves about 3.78%. And with today's action, we added another distribution day to the distribution count. So we're at 3, and all we need is one more to push us over into market monitor yellow. And so, yeah, with today's action and maybe another down day tomorrow, we're going to just basically have almost an average green cycle here, moving about 3.78%. So that's pretty interesting. All right, so moving onwards to some more internals. So the stage analysis at the moment is we have 63% of stocks that are in stage 2 uptrends. We have 15% of stocks that are in stage 1 sideways. 6% of stocks are in stage 3 sideways, and about 17% of stocks are in stage 4 downtrends. So we got a nice little pickup here in stage 4 and a little decline in stage 2. Just thinking that now the market's going to pull back, and what I'm hoping for, if the bullish case is going to kind of last here, is that more stocks go into stage 1. And that will lead us to a longer rally. Although I do have some analogs that point to we could revisit the April lows, if we get going here, if we compare it to 2015. But we'll see and play it by ear, as the market goes along. But moving onwards to more internals here, we have, the VIX finally kind of peaked up here. It's at 17.73. And the put call ratio moved up as well at 0.72. And we got some sell signals from the 20 bull. So we're down to 51 from 65. And then we had 70 stocks in lower lows. So a nice pickup in lower lows and pickup in bearish combo, which is stocks at the low of the day. We have 584. All right, so moving onwards to more sell signals. As you can see here, we were at 245 stocks above their 45-day Bollinger Bands. Now we're back to 140. So that's a sell signal there. Moving from a nice overbought signal to finally starting to turn around here by a factor of 100 stocks. We had 24 stocks moving 5% or more on $100 million volume, so that's good there for the bearish side. And then we had a sell signal in the STMU, so the short-term momentum up is no longer uptrending. It went from 183 to 161, so that's another sell signal. And then the biggest one is this TD sell. We're finally approaching a very overbought level in the TD sell, which is 967. So I would expect that the market would pull back here, fairly quickly here and kind of get rid of that overbought signal because 976 is a pretty high mark. And then what I was talking about, I think last Thursday or on Friday, was the fact that the anxiety index ticked down like a lot. So from 23K to 20, and now we're at 21K. And also the 63P mid here was at 80, and that's typically where things bounce or mean revert because we're pretty overbought. Every time that goes above 80, it's a sell signal. And then, yeah, our long-term breadth went from 27 to 18. So that's pretty bearish there. So I think, I don't know, if this market gets started here to the downside, it could get pretty ugly here pretty fast because we have a lot of overbought indicators that we need to work off, and long-term breadth is actually quite negative. And then the short-term and the mid-term breadth is very positive. So could lead to an interesting market where the analog to 2015, where we revisit the April lows, is in order. And I don't think anybody's expecting that. There's a lot of people who are saying, oh, we already had one black swan event. It would be interesting if we had another one. So yeah, that's about it for the Market Monitor segment. Let's move on to the portfolio and just show you guys everything I did and show you how the portfolio is doing. Going forward. All right. So for those of you who have made it this far in the video, I want to really thank you guys. We're growing this channel slowly, and I'm starting to see more people watching the videos. Really appreciate it. And if you guys really like the content, I would, really appreciate it if you guys smash that like button. It really helps out the channel. And it's just a way that you could show your support, for everything I'm doing here. And that's all I ask from you guys. And thank you so much. But without further ado, let's get into the portfolio segment. So as you can see here, the portfolio is sitting at 110, 154. And yeah, we're down about 1% today. A little bit more than the market, but that's kind of expected because we made a lot of sells today, and one of our larger positions was Tesla, and it was down a good chunk. I mean, there's a lot of stocks down today, but we're still outperforming the market. I think actually, we're doing pretty decently. Beating the S&P 500 according to this website. It's a little bit off, but by about 7%, so 6.67, but this is a little off because we get some options, but about 7%. So we're not doing too bad. Really, really enthusiastic about that. But yeah, what I wanted to do today was kind of show you guys what I did, because I basically rebalanced the portfolio. We had a lot of stocks that were moved up, a lot in terms of the weight of the portfolio. And we just needed to trim those things. And the bond portion of the portfolio, basically throughout this rally, I was kind of selling off some of that and buying more stocks. And so now, that I think we're going to kind of pull back here in earnest, I'm selling. We sold off a good chunk of a couple things and added back to the bonds. So yeah, without further ado, let me show you guys what's going on there. All right. So essentially what I'm trying to target here in this account is I'm trying to target a 38% income portfolio, a 53% stock portfolio, and a 4 to 5% options portfolio, using leaps and then selling short dated calls against those, and about 4% cash at this present time. So what I did today was I went in here, and this hasn't updated yet, by the way, so it's going to update tomorrow if you guys check it out. But the biggest thing that I sold was basically half of this stuff. This portion of the portfolio was about 6.5%. And so the target of this kind of consumer staples, growthy consumer staples, is about 4%. So we actually took today at the open, and we got some pretty good sells, on Elf Beauty, on Celsius, and Estee Lauder. So we sold about $900 of each of these. And yeah, so that was one of the sells that we made today. Moving onwards, let me find it like at the material section. Yeah. So we sold the entire position of Pan Silver Corporation because we didn't have enough to sell covered calls on it, and we were at about 5.5% position sizing on these gold miners. So we just used that opportunity. We sold this one. We're going to keep the rest of them. We're going to keep Cord, and then First Majestic, and that's basically all we sold there. So moving onwards. All right. So, and then the other things that we trimmed a little bit was we trimmed a little bit more Eno data, and we trimmed, what else did we trim? We trimmed none of these, not BitDeer, no Stone Co. We trimmed Tempest AI. Yeah, I'm not sure where to find that at the moment, but we trimmed some Tempest AI, we trimmed some Tesla. You know, unfortunately, we didn't wake up early enough to sell, you know, enough of it at a higher price because I know Elon was going crazy this weekend. But yeah, we trimmed about 3 shares over there, so now we're back to about a 3.5% position on Tesla. We trimmed a little bit of Amazon. Let's see, what else did we trim here? I think that's it. Yeah, that's. Oh, and then we trimmed some of the funds. So we trimmed some of this volatility, premium ETF. Let's see, what else did we trim? Some of the diversified ETFs that had moved really, really nicely, like this UTG. We trimmed some of that. The real estate one, we trimmed some of that. This one right here. What else? We trimmed some BDCs. So like FSK. Let's see if that's in here. Oh, we did trim this Aberdeen. Yeah, and then some of the BDCs. And yeah, so with those proceeds, basically what we did was we added a lot of cash to the portfolio. We bought some of these long-term bonds because they sold off today. So we actually got a pretty good deal because they were all down about 0.8 to 1%. So we used the proceeds to buy into those. We got a 4% position in each of these. We got the long-term treasury, the long-term corporate bond, and the other corporate bonds. So we got 4% position size in each of those. And so we did that. We also added a little bit more to these CLO funds. Let's see where they're at. Yeah, right here. We added more to CLOZ. And then we added to CLOB. And just to raise cash, because that's basically our cash substitute, and it yields about 7-8%. And so we use that as a cash substitute because these things don't really move that much, but they yield about 7-8%. Yeah, so I mean, other than that, we did add to one new position. We started one new position in a long-term bond, a baby bond that yields about 7%. The coupon's about 5%. Yeah, that's pretty much what we did. Oh, and we did add one more diagonal spread, long-term diagonal spread in a tech stock, and I'll show that later on in the video. But I think that's basically all we did. Oh no, we did. Yeah, we added to like the junk bonds and the preferred shares. We added more, about 10% more into all of these because these were kind of lagging behind the growth, you know, stocks essentially. So these were all at 2% positions. So we need to add about $200 here and there because now the account's at 110. So yeah, that's basically all we did. We just, you know, trimmed some of the equity down and added it back to the bonds just in time for a nice little pullback. And then maybe if we pull back a little bit, we might start adding more into the equity side. But yeah, with that, let's get into some of the TA and talk about, yeah, why I did it and where I did it and what I was thinking. All right, so what you guys are looking at here is ticker symbol ELF, ELF Beauty. And I just wanted to kind of showcase you guys like what I was thinking, you know, when I was selling this thing and yeah, why I was doing the trimming, besides just a portfolio kind of target, but also, you know, besides that, I mean, this thing had gone up a lot. And one of my favorite indicators that I'd like to share with you guys today in terms of trimming and selling positions off that are doing pretty well is the distance from the yearly moving average and also the distance from the quarterly moving average. And as we can see here, ELF Beauty has kind of, we were getting in here and it just kind of went up 110%. So this, you know, got really extended, and I thought it was, you know, ever since this kind of high volume day, the stock has basically just gone nowhere. So it's just a good time to sell. And also a lot of the times when these things break the yearly moving average and the quarterly moving average is below it, they tend to pull back and double check the yearly or quarterly moving average. So it's an easy sell with this. And also in one of my other accounts where I still have the full amount of shares, I have these 110 calls sold out in August. But just wanted to show you guys that. What else did I want to show you? Let me show you EL. So same thing there. You know, it's the same exact setup, same exact sell, essentially. Like it's over the yearly moving average by a decent amount. And if you go back in time, if you look at this indicator right up here, this is the most extended off of the quarterly moving average this stock has been ever, really. So, you know, even throughout this entire uptrend, it's never been 35% above the quarterly moving average. So it is a change of behavior. We do want to stick with the stock, but we just want to trim it and try to trade around it because, it's 35% away from the quarterly moving average, and it's probably going to pull back and at least pull back to the yearly moving average here towards August, and we could just buy it back once it comes in a little bit more. So there's that. Those are the big sells. Oh, Celsius was another big sell. So Celsius is the same sort of a thing. It gets above the moving average here. Now, it's not as extended on the quarterly. These guys have been taking their time with this stock, but the yearly moving average is still pretty extended here. And the last time it moved up, how much is that? That's 40% from the yearly moving average. We got a nice pullback, or at least it just doesn't do anything every time it gets to about 40% away from the yearly moving average. So we think Celsius is a good sell here. In our other account, we do have the 52 calls sold on those, but not doing anything there. And then PAAS, I still have it in my other accounts, but we just sold it in the public account just because it's not really doing anything. It's not as volatile as, let's say, CDE, and the share price is a little bit too rich for us in order to sell calls, with our other stocks in that same kind of category. I'm still bullish on the stock. I mean, I think it's gonna do nicely here. It's gonna probably make a nice little cup and handle here, and then even break out further. So we're still enthusiastic about that. Moving onwards. The only other thing I wanted to show you guys today was this baby bond that I purchased. So with some of the proceeds, we went ahead and we bought this MGR, this Affiliated Managers Group. I think it's a 2060 long-term bond. That yields about 7-ish% right now, and the coupon is like 5.6. But yeah, we just wanted to get more long bond exposure because if you look at this thing on a weekly time frame, it's just a perfect little Wyckoff setup. We're getting in here at the low end of the range, and I think par value on this thing is 25, and this thing is callable. So even if these guys want to call this thing back, they're going to pay us 25, and we're in at 20. Or 21, so it's not bad, and we get a 7% yield there, and I don't think it's going to go any lower than here. So we just decided to use some of that to diversify the portfolio a little bit more, get some long-term bonds, because we are bullish on long bonds because they're back here at the low end of the range. I mean, there are some things that are pointing to if this thing breaks out, that would be really bad for long-term bonds, but we're just going to get more yield, and if things go sour, like if the economy starts to tank because Trump starts doing more tariff stuff, you want to be in some of these long bonds because they're going to do really well. And I'm noticing like there's a lot of guys taking on a lot of debt, especially in crypto. Perhaps these guys know something, like the bonds are going to go down because there are some decent moves in bonds, like these are the short-term bonds, we just want to kind of up our bond exposure because we had been selling it off to buy more stocks, and so now we got the moves out of the stocks, so we're happy with that. But yeah, I mean, one more thing I wanted to show you. This BTBT and BMNR. That's another trade we made today. So we went ahead and we sold the $5 calls. We had the 4s sold, and then we bought them back and then sold the 5s because this thing is just moving a lot. But with today's candle, it's probably going to go sideways here. It's just broke the yearly moving average. So we sold those calls and we used some of that proceeds. We bought back our BMNR because we had sold some up here at 145. So we bought another share in there. We're still enthusiastic about this trade because we think stable coins it's going to be the next big crypto trade. And with that, that's basically what I did and how I rebalanced the portfolio. We're back at about 38% income and 53% stocks, and then some cash, 4% cash, and then some options. Right now, we're not too much heavy on the options, like 2 to 3%, but we'd like to get that up to about 4 to 5% because we are short the Qs via some options, short-term puts. But then, we want to buy some long-term diagonals and just up that portion of the portfolio to make some more income. So, hey, with that, really appreciate you guys tuning in here. Hey, if you like the comment, feel free to subscribe to the channel, like the video, and hey, if you guys want me to check out anything in your portfolio, let me know. Leave a comment down below, and I appreciate you guys. Have a good one.